Thank you for being here today. Washington County Commissioners Court is now in session, Monday, July 6, 2026 at 10:30 a.m. And the invocation will be given by Commissioner Hannah and the pledges.
Please bow your heads with me. Lord God, thank you so much for this day, Lord. Thank you for this Commissioners Court and the work they do for the county government. Lord, we just want to thank you for each and every employee that works for county government and all the elected officials, Lord God. Lord, we just ask that today's meeting is pleasing to you and that many of our questions can be answered here today. Lord God, we just ask that you be with each and every one of us as we leave this meeting and be with us in your name. In your name we pray. Amen. Amen. Let's do the pledge to the United States flag. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. And the Texas flag? On the Texas flag, I pledge allegiance to thee, Texas, one state under God, one and indivisible.
Item number 3 on our agenda, presentation by Gary Kimball with Specialized Public Finance regarding the county's options for financing infrastructure projects. Before we begin that, I would just like to kind of set some ground rules there just a little bit. Before we begin, I would like to review the process for public comments. Anyone wishing to speak will have an opportunity to do so after Mr. Kimball has completed his presentation. Please do not interrupt Mr. Kimball while he's doing his presentation. Each speaker will be allowed one opportunity to speak for up to 3 minutes. After each comment, Mr. Kimball or members of Commissioners Court may respond and provide clarification as appropriate. We appreciate everyone's cooperation and ask all comments remain respectful, focused on the matters being discussed today. Mr. Kimball, welcome this morning. How are you?
Good morning.
Good morning, sir.
Y'all hear me okay?
We can, yes, sir.
Well, so I'll try not to be too redundant, but we have covered this ground a couple times. I probably go back 4 years in terms of running numbers related to these projects in one form or another. So we've been putting quite a bit of time into this. At the end of the day, our job as representatives of the county is to get you, whatever money you need for the projects that you have on your capital improvements list at the cheapest possible cost for the lowest possible impact on the tax rate. That's our job. We were, lucky enough to be involved 2 prior times for the county on other projects. I think we go back to 2011 for the first deal that we did, and then we refinanced those bonds back in 20 or 21. But you don't have any debt now. Those bonds are completely off your balance sheet as of last year. And, if there is a good time to talk about doing new projects, this is probably the best time to do it for a couple of reasons that we've talked about before, and I'll cover those again because I think it's important. Since COVID, we have seen extreme project cost inflation. So the idea that you're going to wait to do whatever you need to do 3 years from now, 5 years from now, and think it's going to be cheaper, that's just not been my experience. Since COVID, infrastructure cost inflation has averaged more than 10% a year. And that is despite the fact that inflation has come down from where it peaked in 2023, 2024 at about close to 10% annual inflation on normal cost of goods. Infrastructure is different. The supply chain problems persist in getting steel, in the cost of cement, and the inputs are just, they're not getting any cheaper. So I want to point that out. That's something to keep in mind. And then we've had a fairly significant change in the outlook on interest rates. So if you look back 6 months ago, the expectation in the markets was that we might see 2 Fed cuts in calendar 2026, and maybe followed by another cut in 2027. That has totally reversed course. Given the shooting in the Middle East, what that's done to oil prices that really haven't totally filtered through the economy and probably won't for several months to come. The expectation is that we're actually going to see a rate increase by the Fed before the year's out. I don't expect that's going to happen before the November elections, but everybody's pretty much betting that this December Fed meeting is going to be an increase in rates, and that they're not stopping there, that we're probably looking at continued increases through 2027. And nobody can tell me with any confidence, the people I follow in the market, and we are in the market weekly. We did 150 Texas public finance deals in 2025. So we're doing 3 deals a week. That's, $6 billion worth of bonds across the state. We represent over 500 political subdivisions across the state. So we see a pretty wide swath of what communities across the state are having to finance. So we got a pretty good idea of what's out there. And just do not expect financing costs to go down. Do not expect project costs to go down anytime soon. So with that, let's kind of go into what are your options for the project. You can do voted general obligation bonds, or you can issue certificates of obligation. Those are non-voter approved financing that essentially sell into the market at the exact same rate. There's no difference from a bondholder's perspective whether they hold a general obligation bond or a certificate of obligation. They will charge you the same interest rate for the same term bond issue. The real difference is in cost. So if the decision is that you want to go and do an election, you've got to hold a countywide election for those bond propositions. Estimates, vary from county to county, but what we're told is that it's $35,000 to $75,000 to hold a countywide election. And then to the extent that, you try to split this up and do one piece of it voted and one piece of it as certificates of obligation, then there would be an additional cost to doing 2 financings versus 1. At about $25,000 if we have to come do this twice versus doing it once. So, could be upwards of $100,000 more expensive if you split this up and vote even a piece of it versus doing this as certificates of obligation. There's also a time component. Your earliest opportunity to call an election would be September of this year for a November ballot. The earliest we could get into the market for that scenario would be January of 2027. So we would be behind the Fed increase if that plays out the way everyone tells us it's going to play out. With certificates of obligation, we could lock interest rates as early as August and have funds in the bank earning interest as early as September. And I talk about earning interest. That's important because you are allowed under IRS rules to invest the money that we would sell at rates that are taxable rates. You're selling tax-exempt bonds, but you can invest that at taxable rates. So the potential exists that during the construction period, you're actually making back everything that the bonds are costing you until you've spent all the money. So that's nice, to the extent that we're talking a 2 or 3 year or even a 4 year construction period, you get to earn money on the invested proceeds at the same rate as you're paying on those obligations. So that's an additional efficiency. We've talked about what that will mean on the tax rate for the county. The county is sitting on about $2.4 million of debt service funds that could be used to offset the cost of the financing that we're discussing. We also have about 3/4 of a penny that right now is over in the maintenance portion of the tax rate that could be moved back, and taking those things into account using the freeze-adjusted taxable tax base of the county, we're under 4 cents of tax impact per $100 valuation of a county resident. So what does that translate into? I ran some math, you know, for property that is, you know, appraised by the county at, say, $350,000, which I think the average is not too far below that, but I'm trying to be conservative. They get a $140,000 homestead exemption, which means the net taxable value is about $210,000 for that piece of property. This 3.95 cent increase, said just under 4 cents, would be less than $83 a year to be able to finance $61 million worth of improvements for the Justice Facility and the covered rodeo arena. So those are big numbers, I understand. It's never easy to think about a decision to go into debt, but you know, we do see a real good slice across the state, and I can honestly say that you guys are in a very unique position. I don't have another client that doesn't have any debt on their balance sheet. You are extremely unique in that position. That means we'll get a very strong bond rating as well, because you've got close to $7 billion worth of tax base and no debt. Adding $61 million probably puts you in the AA or better bond rating category. That's 2 notches off of AAA, which is the best you can be. AA is what the United States of America is right now. So, you know, that's going to get a very low interest rate in the market. Texas paper in general, nationwide, is considered pretty much the gold standard. You know, nobody wants a piece of Chicago paper, nobody wants a piece of California paper, but they all really like Texas paper. We have no problem getting that into the market at very low rates. If we were to sell today, we'd be in the low 4%, and that's for 25-year fixed rate money. That in historical terms is still very good. I've been doing this 34 years, and you know, when I started in the early 90s, we were doing bonds in the 7% range. That's tax exempt, 7%, and it's just come down pretty much, you know, across the board. And we don't enjoy the kind of rates that we saw from 2010 to 2021. That was an aberration in my experience. The Federal Reserve was printing money like it was going out of style and artificially keeping interest rates down. And we were able to sell bonds in the 2% range, you know, for 25-year money for that period of time. But I don't think we're ever going to see that again. Don't have a crystal ball, can't guarantee anything, but I think 4% money, in my experience, over a pretty long span in this business, is very attractive financing. Your opportunity to invest that, you know, at rates in excess during the construction period are pretty good. And then at the same time, you've got very strong reserves. You know, you've managed the county's finances very conservatively, and you will be earning interest on those balances, those fund balances, in, you know, large measure. You'll be able to offset a lot of the interest cost on this. I have not factored that in to that 3.95% tax rate projection. Now, understand that is a projection. We have no idea what the county appraisal district is going to set your tax base at from year to year. That's something that they determine every July, and then they set that after it's announced, and you set your tax rate accordingly. But, you know, based on some pretty conservative assumptions, we think you'd be below 4 cents net for the entire cost of what we're talking about financing. So those were my prepared remarks. I'm happy to take questions from any of the commissioners, from the public, and I'll do my best to try to make it as clear as I can, you know, how this process works and what the costs are.
Okay, anyone that has a question, if you will, raise your hand, stand, and identify yourself for the records, and then Mr. Kimball will field your questions just a moment. and so that we can proceed in an orderly manner, okay? Okay, Commissioner?
I just wanted to make one point, and this is really for everybody in the room. Diane White could not be here today, but something that I think is a regular misconception.
Diane Wright is.
Diane White is the chief appraiser for Washington County. And not only does Washington County have an additional homestead exemption when you turn 65, but there's a tax ceiling. So what that means, and that's on the dollar amount, not your value, not your rate, that means that you are locked in. It's a not to exceed number. So if you have a homestead on that property and you are 65 years or older, you will not feel the impact of this potential bond, CO, what have you. The only places, so if you live in the city, tax ceiling, no increase. For folks outside of the city limit, the only part of your property that's calculated that would be the agriculture. So I'll give you an example. My folks own 67 acres. My folks are, in their 70s, so they're 65 and over. But we calculated for them what this would be, and it would be $4 a year. So I just wanted to make sure that before everybody gets up here and starts asking questions, that everyone fully understands the 65 and older, it's a tax ceiling. So it's a not to exceed number.
Yeah, and we calculated our just under 4-cent tax impact using the freeze-adjusted net taxable value. So we've baked that into our numbers.
Yeah.
All right, Mr. Amos?
Could I ask that you speak into the microphone?
Sure.
Oh, sorry.
So far away from everybody and all of these people.
Did y'all hear what I said then, or do I need to repeat it?
No, you don't need to,
Okay.
but in the future, if you would, please appreciate it.
Okay,
Okay.
well, thank you, sir.
Sorry, I didn't realize.
Okay. Does anyone have a question? Okay, Ms. Charlie?
My name is Charlie Douglas.
My question is, you talked about being able, with these certificates of obligations, that you would be able to reinvest that money into the open market and earn money during the construction period. Is that not also true of funds that are under the general vote, that the vote goes to the voters?
Yes, equally true of both.
So it's true of both things.
Yeah, absolutely.
All right, and the $100,000 cost, can I ask a second question?
Go for it.
The $100,000 cost is on a $61 million project to bring to a vote. So it's $100,000, even if we had to have two.
That's an estimate, yeah.
All right, but it's less than 0.2%.
Yes.
Okay, just.
Thank you.
Thank you for the question.
Now, just as a follow-up to that, keep in mind that if you are talking about doing this as a voted deal, then the first chance we have to lock rates is January 27. If you tack 25 basis points onto $61 million over 25 years, it's going to cost you a lot more than that. So
Oh my
you're
goodness.
exposing yourself to the likelihood of an interest rate increase on
It's gonna be-
$61 million over a 25-year period.
But that would also work on the other side of the coin. If you invested that money, that interest rate would also be higher on what that money would earn.
But only for that construction period, whatever that is, for that 2 years or 3 years out of the 25.
Okay.
Interest rate would be for the entire term.
Okay, does anyone else have a question or a comment? Mr. Amos?
What's the total cost? My name's Angel Murray. What's the total cost to the voter of that 61 million?
The principal plus interest,
Yes.
give me a second. $101 million. That's assuming
That's all.
we get 10 years in and we don't refinance it down. That's assuming that the county doesn't prepay it at some point. But if it runs the whole 25-year term, $101 million.
Yes, sir.
So there is
Don't call me for a payoff.
You get 10 years in the Texas market, within which you cannot prepay. But if, let's say year 5, county's got a windfall and could pay it all off, then you invest that windfall until year 10, and
then
it's
pay.
basically washing out for that last 5-year period until you can prepay it. But you can then prepay it with no penalty. Does that make sense?
Good question. Thank you, sir.
And Mr. Kimball, my understanding of the rate, and I wasn't sure if this is the same for bonds and COs or if it was just CO. But if we went out for a vote, and let's just say hypothetically it's approved, does the INS rate have to be, does it have to fully fund the project? Whereas I know, at least with the CO, and like I said, it could be both, we don't necessarily have to go up to the 3-4 cents. What we could do is we could do, you know, we have 3/4 of a cent, as you said, that was transferred into the general fund. So if we transferred, let's just say hypothetically, that 3/4 cent out, right? I think it'll generate about $500,000.
Yep.
And of course, I think those calculations, I was only doing it on the 45, not the 61, so just for the judicial. But my understanding is that, you know, we generate, or this last year, we generated $1.7 million on all of our investments. We have $2.5 million in the INS fund, so it's essentially a seeded fund. So if we wanted to, we could transfer that rate over and not necessarily increase the rate anymore if we wanted, right?
Yep.
And then, so we don't have to fully fund the INS rate to support 100% of the project, and then we can use, that way it's not all on the backs of ad valorem tax.
Yep.
We can use interest and a certain amount of that seeded fund to balance or pretty much as long as we can. Or what is the timeline that rate has to, you know, essentially fully fund?
Well, let me take it in pieces. So the first question is there any difference between the way it works for GO bonds or certificates of obligation? And there's not.
Okay,
So-
so it's the same.
It's the same. As long as you can offset with generally available funds, you're allowed to offset whether it's voted or certificate of obligation financed.
Okay.
All right. The second part of that is that, you know, to the extent that you have interest earnings on your fund balances, you are always allowed to offset that and net your tax rate down. So if that, you know, and I have not calculated that into my estimate. So to the extent that that exists and that's the way you want to do it internally, you have that freedom.
So we have that we basically have that flexibility.
You do.
Where we could use interest earned.
Correct.
And other sources of revenue, outside of the rate, that's not necessarily fully on,
Yeah.
you know.
Yeah,
ad
you could buy
valorem.
that down by, you know, more than a third if I'm following your math. Because, you know, 5% on 61 million is a little over 3 million a year. If you've got $1.2 million or $1.5 million able to offset, then
Offset that.
then you're offsetting, you know, 40%
Yeah.
of that annual interest expense.
We could do that
You could
if
do
we
that,
wanted.
yeah.
In either scenario.
In either
Yes,
scenario.
Either scenario,
Yeah.
yes, ma'am.
The 101 million that you gave, was that, did you
That
figure in the
includes-
other quarter percentage to that?
No, that is at current rates. So if this goes to a vote and we can't get into the market and lock until January, and we've got a Fed hike in between then, it's gonna be more than that.
And how much more would that be?
Only,
What would be the cost? Is that like $4 million?
I can tell you that pretty quick.
I think the public needs to know that.
Needs to know the difference, yeah.
That's another $3.8 million
4 million.
for a quarter point on 61 million over 25 years.
Emil?
But it's,
Money we're wanting, the things we want the money for is the Justice Center and the additions at the Expo Center. Expo Center is going to be how much?
15 million,
And the Justice Center is going to be,
45 million.
Well, except for my understanding is that this court can make a decision.
We just had to put the notice out for the max.
That's
So it's
right.
not necessarily, if this court wanted to, we could take out a CO for the Justice Center and not the Event Center or vice versa. So it's just for the
This
point
is
of the
the
notice, we have to
max.
notice what the potential max is that the
Right.
court would be
Please.
considering.
Emphasize that point for us, Mr. Kimball.
Yeah, so the statute requires that there are two actions of the court in order to issue certificates of obligation. So that would allow us to lock in August. And one of those court actions has already been taken, and it's to approve the publication of a notice of intent to issue certificates of obligation. That notice has to specify three things. It's got to have a not-to-exceed amount. It's got to have a description of the project, so the only things you can spend the money on have to be described in that notice. The not-to-exceed amount is exactly that. It gives the court the flexibility to issue less than 61, any amount less, but you can't go over. And then it's got to specify the date of the action by the court to award the sale of the certificates after we bid them. So in compliance with the statute, we have now had the court approve the notice. The notice has already been published in the paper, and that notice has to run a minimum of 45 days. So that clock is now ticking. We are then scheduled for court action in August, a date that we would accept bids, because we sell certificates of obligation and we sell general obligation bonds at competitive sale. That's a national audience. We are in the process of drafting the offering documents. We're talking to the rating agencies already to try to get a bond rating. The higher that is, the better reception we're going to get in the market. We'll probably get a minimum of 5 bids. I suspect it could be as high as 10 bids. And those will come from all over the country. And what happens is it's an all or none bid. It'll be from a big underwriting firm who will commit their capital at a certain interest rate. Morgan Stanley, JP Morgan. Somebody like that is probably going to be the winning bidder, whether we do this voted or non-voted. But we sell it at competitive sales so that we get the absolute lowest possible interest rate that we can get. This court, will accept my recommendation on, which bid to award the sale to. And then the entire transcript has to be submitted to the Texas Attorney General's office. They basically check the boxes that the county has satisfied all the steps embedded in the statute, has the legal authority to incur the indebtedness, which it does. And once that's done, they issue an approving opinion that is incontestable in court. That's important for the bondholders. They want to know that you're on the hook when they put their bid out there and agree to close at a set interest rate. They then have the confidence to go out and then market those individual pieces of the 61 million to investors. And that includes property and casualty insurance companies, bank trust departments, and individuals who are typically, in the higher tax brackets. Those are the audience for tax-exempt bonds. They get the most bang for the buck on that tax exemption. And then at closing, those bonds will go to the end investors, and they'll hold that for a minimum of 10 years, at which point, if the county has the funds, they can begin to prepay. But these certificates or bonds are sold in $5,000 denominations, and they're sold all across the maturity schedule. So in other words, we'll have $100,000 worth of bonds that are going to mature in 2028 for sale, and we'll get a certain interest rate on those. It'll be real low. And then we'll have $400,000 that mature in 2028. And those will have a slightly higher interest rate. And so the number that we're using to estimate the tax impact is a blended yield that goes from the first bonds to mature all the way out to the bonds that would mature in 2025. And those will all go to different investors because different investors have different investment criteria and time horizons. So we don't know who will end up owning the bonds, but we will know the interest rate at the date that we come and present bids to the court.
Yes, sir.
So, income producing facility, is that taken into consideration when you sell these bonds? In other words, if there's income from the facility being built, is that helpful?
It is, yes. It goes into the rating decision. So in our discussions with the rating agencies, we present the last 3 years audited financials of the county. We present the appraisal district information certifying the tax base. We look at tax collection history. We look at the makeup of the tax base. Is it primarily residential? Is it primarily, in West Texas, we got a lot of clients that have a lot of oil and gas value in the ground. And the rating agencies treat that a lot differently than they do a residential home value, because one's a very volatile component of the tax base and one is not.
So an equipment facility that is money-making
Would help the rating,
cover costs
absolutely.
would be taken into consideration, so the percentage of the interest rate may decline.
Very, very likely, yes, sir.
Good point. Thank you.
Right, and kind of at the start, have you done the math on each one of those options so people can take a look at that? So, because you said option A, which is obligations, right? Yeah. So
I
option
didn't
A-
assign an A to either
Yeah.
one of them, but yeah, one's A and one's B.
We get a better rate, and we get a. Yeah, and we get it's gonna cost us 1.1.
$101 million
Okay.
for the deal that we could close in September, which would
And
be
we also have a
certificates.
chance to make money on that money.
We do.
Which would help out.
Yep.
Can you run those numbers?
I've run
I'm just saying.
probably 50 sets of numbers, but yeah, I can show general obligation bonds versus certificates of obligation and show the relative difference that would embed that $3.8 million that we anticipate would be the impact of the Fed. 100 grand more if we do the voted, yeah. Yeah. You're pushing a $4 million delta to do this voted. If the Fed does what? Yeah, yeah, absolutely, I can provide that to the court.
Can you get pictures of these projects?
Yes.
Do I see a picture of the expo? Do I see a picture of the Justice Center?
Yes, we can.
Are they available?
Oh, they've been published, yes, but Carrie, can
They've
you
been
pull
published,
that?
but we have some of those in my office as well.
If you're not online, can you get a picture?
I think you can.
Yes, you can, Amy.
That's a good question. Thank you.
Mr. Kimball, can you speak a little bit to the process of a petition to the COs and what would happen if there is a petition?
Yes, so I think it's 10% of the registered voters in the county would have to sign a petition that would have to be presented to the court before the court takes action to award the sale of the certificates of obligation. If that's the route you advise us to proceed with, then we're going to get your bonds rated, we're going to take bids, and we're going to show up here in August at a regular commissioners court meeting with bids in hand. We're going to make a recommendation. The petition an eligible petition would need to be submitted prior to that action to award the sale. If we get that petition, that would force you to a vote. So you would then have to call the election in September for a November ballot. And if that ballot goes down, you are then locked out of financing those projects for a 3-year period. So
Wow.
if it's a project that you have to do, you just got 3 more years of inflation on the cost of the
Wow.
project,
Yep.
and you just exposed yourself to more interest rate upside on the financing cost. You know, again, we don't have a crystal ball, we don't know how that's gonna work out, but that's what all the financial press that we follow is saying.
We have a definition of locked out. Does that mean starting a new project? Does that mean on this project?
It means legally you are not allowed to finance those projects that go down in a vote for a 3-year period.
You can't start on it for 3 years if they are voted on,
And the vote fails.
If it fails.
if it fails.
Correct.
Okay. If it goes out,
That makes sense?
if it goes out for a bond and it fails,
You
you
are,
can't bring it up again for 3 years.
Correct.
If it goes out for a bond and passes, you don't have to wait 3 years.
that's right.
You just
Yeah.
pay $4 million more.
I'll be in the market in January if it passes.
Right.
Yeah.
You just pay $4 million
But
more.
let's also take our prior
Okay,
ballot measures in account.
okay.
Petition must
That's
come
just
in
on for those
Go-
CO, right?
Before that date in August that is in the notice that was in the paper. Yeah, that notice has the specific date that is your deadline.
Mr. Kimball, is there a verification process that has to go through with that petition?
My understanding is the county clerk has to take those signatures and
Verify.
determine against the voter rolls whether or not it's eligible or not.
Wow.
You would still take action to award the sale, but if it takes 2 or 3 days to verify the petition, you know, the underwriters know that they're hanging out there exposed. If a petition is presented, that their deal could go away. It would just literally collapse everything. All of the work that's been done to date would be erased, and you would start fresh with calling election in September.
And
Wow.
if, the petition will be to stop both both projects, because they're both listed on one CO?
Correct.
So you couldn't petition to stop just a,
You can't split it up at this point.
and if it goes to a ballot, can you split it up?
Yes.
Okay.
Yeah, it would be 2 separate ballots.
One for each project?
Yeah, I think you could actually combine them if you wanted to, but you could also split them up if you wanted to.
Okay, thank you.
Yeah, well, I'm not the attorney on that, so
Right, sure.
I put a qualifier on it, subject to them agreeing with that, but that's my experience.
Thank
So
you.
essentially what you're saying is, best case scenario, I mean, obviously, judicial center, I think courts were talking about it 2 years before I took office in 2019.
Yeah,
And it's also part of the county's strategic plan. But, so, just to make sure I sum it up, we have the option, as long as the petition doesn't go through, to evaluate the CO.
Yeah.
We could get into the interest rates now. If we go to ballot and it passes, we're automatically stuck with an additional $4 million potentially.
potentially,
Correct?
yeah. Yeah,
Okay?
Wow.
highly likely, I would say.
Highly likely.
Yeah.
But if it fails,
Then you're locked out.
then we're locked out for 3 years.
You can't
So
do,
it'll be more than 4 million.
you can't do the
by that
Expo project, and you can't do the Justice Center project for 3 years if it is forced to an election, or you decide to call an election, and it fails. Correct. I mean, I can tell you, I have addressed this court at least 5 times over the last 5 years in public session
It's because we don't like spending money, Mr.
about all of this. Yeah, no, it has been a very thorough and lengthy process that predated your paying off your debt. You know, you kind of did it in the responsible way, right? You got all your debt off your balance sheet first, and now you're coming back. And like I said, I don't have we got 575 clients across the state. I don't have a single client, not a single one, who can say what you can say.
Amen.
Okay.
Yes, sir.
Yeah, it's a rare thing.
I think there was someone in the
Mr.
back.
Bohart.
Oh, Mr. Bohart.
Yes, Douglas Flart. Mr. Kimball, you said something very early on about the infrastructure inflation factor.
Yes.
You're correct, after COVID, I served on the Liberty College Board of Trustees, and we had bond issues that we had to consider. Of course, those revenue bonds,
With our firm.
taxpayers, but they did come to the student tuition. The inflation from infrastructure is unbelievable. Do you have a current rate on that? In my mind, it's something like 7.5%, 8%.
10% a year is what the engineers that I'm working with are telling me.
I experienced it, the cost to wait is very, very expensive, because you heard 25 basis points costing $4 million over life.
10%.
Put all that into the context of 10% inflation on something.
Yeah.
It's very, very appropriate to consider doing it now than running the risk of doing a bond and not being able to do anything for 3 years, and probably more.
Yeah.
after that. And you were pretty good. I served on the appraisal district board.
Yes,
You
sir.
got pretty close.
Yeah.
Well, and I'll add something to that. So, you know, we do 150 deals a year. So we're doing about 3 deals a week. And they're all over the map. I mean, we represent the Lower Colorado River Authority, the Brazos River Authority, City of Corpus Christi, Williamson County, Washington County, and everybody in between. Personally, I do a bunch of big river authorities and water districts on top of city and county work. And I can't tell you how many times between 22 and today where, you know, we get an estimate of a 40-mile water pipeline that's going to be $75 million. We'll sell the debt, and then I get a phone call 60 days later, we just opened the bids, and we are $20 million short.
Oh, my gosh.
And guess what? You get to go back into the market and do this all over again with all the associated costs that go with that. So not only are people undershooting, and these are engineers who do this for a living and they're missing it by sometimes 20% missing the mark on big projects. Financing costs to go back and do the other 20 million, you just rang the cash register for another $100,000 that you didn't need to if you'd just done it once. And that is very real. I mean, shoot. I'm getting 10 of those phone calls a year where 10 of our 150 million or 150 projects were undersized and we got to go back and do them again.
Mr. Kimball, let me ask you this. Let's say hypothetically the court went forward with the $61 million, right?
Mhm.
We invest that as we're moving through the project, but let's say the court said, okay, we're gonna hold off on construction on the event center, because obviously, you know, as we've talked about inflation, you know, the $45 million judicial center could be $55 million
Sure.
next year,
Yeah.
you know?
Yeah.
So I think what my question is, could we take out the 61 million, build the judicial center first, and then, at that point, the court can make the decision, you know, okay, well, let's, you know, take what's left and keep it invested so that we can try to pay down
Yes.
the principal.
Yeah.
Or, you know, if we have enough left over, then we put it into the event center. Do we have that
You do.
flexibility?
Yeah, you have total flexibility in that regard. You can invest it, hopefully earn exactly what it's costing you, and carry it as long as you need to carry it, or until the bonds become callable. You just, you know, if you decided to shelve one project, you sat on that money, you invested it, basically paid the interest in the meantime, and then you hit the call date on the bonds, you could pay them off,
Yeah.
and you were not out a penny.
Yeah, because I think we're million right now, based on what we have. How much is that? Isn't that like, only, it's generating 1.7, and isn't it off of half of 60? Isn't it only like off of 30? Or Peggy?
It's on the whole pot.
I know, what is the whole pot total? That's what I was asking.
Investments are like 40.
It's 40?
Okay, so 40 of the 60 is
So
generating
we know
$1.7
that
million.
We'll generate at least $2 million probably the first year on this,
Yeah.
which if we don't want to penetrate to that full 3.95 cents.
You're carrying it at a
3 cents,
wash, yeah.
We can, exactly.
Exactly
Yeah.
right.
And I'm not above soliciting donations. If somebody, a concerned individual wants to step up and donate $1 million toward the project, and maybe you get
Mr.
5
Lyons
individuals who
needs to
do
work on
that,
for the arena.
we will gladly finance $5 million less come August if you guys can find 5 generous individuals in the meantime to pony up $5 million. You're not locked into 61 is my point. We published for a not to exceed amount. If you decide and you tell me before we bid that the number is not 61, it's 55, then I'll only issue 55.
Well, and I think one of the key things is that our constituents need to know that before they get asked to sign a petition, that it could relatively cost them $4 million in taxes.
Exactly.
Yeah, it's fair.
If not more.
If
That-
not-
that's best case
that's on the low
scenario.
That's a
side.
25 basis
Worst
points
case
hike. If there's a
scenario-
50 basis point hike, double that.
So you could easily spend $10-15 million more if we have to wait 3 years.
Yeah, I don't follow anybody that thinks the Fed isn't going to do something to the upside before the end of this calendar year.
And we've talked about this sooner, but, COVID threw a wrench.
Yeah,
We've been trying to get this off the ground for a while.
Yeah, I mean,
This isn't.
I wish you'd done it 2019 when you first called me, because
Well-
it would have cost $40 million,
Yeah.
and you would have done it at 2% interest.
Well, we're old-fashioned to pay off our debt before we go into deeper debt.
Yeah,
Okay?
I understand the reason why.
Okay.
Mr. Kimball, is there the possibility
Excuse me,
that?
just a moment.
James Corbett. Just a small point about the election. We have an election coming up in November. Is that the bond proposal be included in that election?
Yes, sir. Yeah, the state law says you got to call it 60 days before having it. And so if you called it in September, early September, first week, you could have it in November.
Mr. Kimball, does the court still have the ability to decide to go to a bond election as opposed to the certificates of obligation?
Yeah, yeah, you can let that notice expire. You can direct me not to bid the deal in August, and you can come back with basically what you did in June to approve the notice becomes null and void. It runs out, the clock runs out on it, and you're not committed in any way. And then you can start a fresh process in September to call a bond election for November. Yes, ma'am.
Just curious, thank you.
And that would be us saying that we're willing to forego $4 more million.
Yep.
You'd be taking that risk, yes, sir.
Just for clarity, so the process of the certificates of obligation, sorry, I'm the same height sitting down and standing up. That can be halted,
Yes,
that process,
yes.
okay, before.
If the court decides to just let that publication run its course and do nothing else,
Yeah.
that's,
Then it can be.
that's their choice.
Just for clarity.
That is their choice, yes.
Brandon.
Okay. Anyone else? Okay.
Is there any restrictions on how, what you're saying you're gonna fund this, say, in September? And how we can invest this money? Can I, because I do the investing for the county, can I put it into like text pool, text class and all those guys?
As long as it complies with the terms of the Public Funds Investment Act, and all of those are compliant, you can invest it in those funds. Yes, ma'am.
Based on that, we're currently getting like 3.4, maybe 3.5 on good month. So if we're gonna be paying 3.5 and the Federal Reserve goes up, I'm gonna make more than what I'm gonna pay, correct?
Yes. You're only allowed to keep that, though, if you spend the money in 3 years. There's some, they're called arbitrage rebate rules. But that's correct. Yeah, you can keep the positive arbitrage if you spend the money within a 36-month period, and there's some
That's it.
hurdles that you have to
Thank you,
meet
Mr.
along the
Kramer.
way.
Thank you
But
for
yes, I've got a lot of clients who do exactly that and love pocketing that positive arbitrage.
How did the
Thank you.
$61 million number come about?
Leave it to them. That didn't come from me.
Okay.
That was from, well, I don't know, do y'all want to talk about that? I think y'all were more involved with Ms. Burke's Plan North, but,
Right.
you know, we
All right,
That's
hired.
let me make this a little easier. Why don't we build Trey a Marriott instead of a Four Seasons?
What are you talking about?
Do we need a $45 million Justice Center?
We
Well,
more than need it.
I can tell you,
More than
they've been
needed,
talking
sir.
about it for 10 years. I don't know, the prior sheriff chose not to. I mean, it's kind of a weird situation to tell everybody how, from a security and liability standpoint, we're exposed in this courthouse. But Sheriff, if you want to comment on
No, I
that,
understand that, and he and I have talked about it.
from a
I'm
liability
just
standpoint.
saying that
We're not building a Taj Mahal, if that's what you're asking.
for $45 million,
That's correct.
That's,
Well, that's not a,
Sir, all due
not a
respect,
lot.
you would not believe what it costs to build hardened facilities across the country now.
you
I
can't even
mean,
build a school for $45 million.
so when I was first starting in this business in '93, you could do an elementary school for $15 million. You could do a high school for 25.
Yep.
I haven't seen a high school for less than $100 million in the last 2 years. The price tags on these facilities has gone bonkers.
well, it's infrastructure.
And
Well,
yeah,
and statutory requirements.
they have
It's very
statutory bid buy requirements. They've got to follow, Buy America on a lot of this stuff.
Jail
And
standards.
Jail standards, court
everything
standards,
drives the
OCA,
cost up.
everyone.
And I'm here to tell you, I keep getting these phone calls where somebody thought they could get away with 30 million on something that when we take the bids come in at 45. So I think they're just trying to be conservative. And to the extent that the bids come in a lot lower than they're estimating, and they're talking with architects who are supposed to be knowledgeable about what these things cost. If the bids come in lower, by God, we're going to set the extra money aside and have it, offset its own cost
Exactly.
until the first day that those bonds are called, but we're going to pay them all.
And the other piece of that is, I guess, Charlie, you were probably there when Katie did her presentation?
I was there.
Okay, well, if you had been there, you would have heard that she hired a firm that specializes in evaluating courts to project their docket, their number of cases. They use all these different metrics, and they used that to track where we needed to be. We already don't have enough space, and she said within 10 years, we need to have 4 courts. Because they've been asking, so my understanding is, Carly, you might know this, but I know that the district judge has been talking to Senator Colcourse for at least, 4 or 5 years about a third bench, needing a third bench, and that's based off of the docket. So what Plan North did was they evaluated all of these scenarios, because what we don't want to do is potentially finance a project, a courthouse, right? And then 20 years, we've already outgrown it. That would just be, that's just not smart, right?
That's like
So it's
deja
like
vu
this
all over again.
courthouse is what, 85 years old, right? So it might appear initially that it might be a little bit bigger than we need, but that's just, we have to plan for 100 years, not for 20, not for 30. And actually, in that presentation on the second story, there's actually additional expansion room that she hasn't shown, that's not built in. It's additional space that we can add on to the courthouse later.
Yeah, and in 20 years, you're going to be talking about price tags of 85 million. And I'm going to
For the
be
same
fishing on a
Justice
lake
Center.
somewhere, and I won't care.
Imagine what we could have built had we done this in 2019 or 2020 before
Yeah.
COVID happened.
It would have been a lot cheaper.
We
There's
probably,
no
we
tuition.
probably could have built this same facility for 25 million, 30 million. Can't do it
But we
today.
didn't.
Huh?
We didn't.
Well, we didn't because we got hit upside the head by COVID.
Well, that's procrastination, but other
And we
than
didn't
that-
understand, you know, you gotta understand, there were a lot of other economic variables going on during that time that we were
Well,
trying not to.
I live here too, Candace, I understand. You know, you got this much money in this hand and not enough in this hand, but.
That's how it
Yeah.
always is
Yeah.
with government.
But you just got to understand that we've been very conservative what we do. We wanted to pay off that debt first. Not you understand.
I appreciate that, John.
Well, we
Yeah.
really do. And we've tried to do these, you talking about the structure, do we need a $45 million structure? We have cut corners, done everything we can. We don't want to have a tent down there type thing or something like that. It has to be a facility that's representative of Washington County, what we stand for.
All right.
So, and I would like to ask, District Clerk is here. Scarlett, do you feel safe in the courthouse anymore?
No, absolutely not.
Okay. Mr. Eastep, you have to work in there all the time too. What do you think?
Construction is replacing. It's a 100-year-old building, and we're not doing 100-year-old business.
Gotcha. Okay. There is a need. That's the point I wanted to make with those folks that work in that courthouse. I work in there every day too, so. Anyway, Miss Beth, you've worked in there a long time. You know how the situations can be.
Had a number of situations where we've been in fear that someone was going to hold a gun on us from around the side, and very aggressive. You think stuff doesn't happen in Washington County, it does. And I'm reminded that, you know, you bought a house that was built in 1939. That's not, we don't operate like we did in 1939. It's a completely different world. I mean, if you pulled the carpet up in that building, the floor would look like Swiss cheese, because it's had holes drilled through it for all kinds of cords and electrical. You know, we never changed anything. We still, we would have air conditioning there. We would have so much. I mean, we've got to, this county's growing, we've got to move forward. It outgrew its usefulness in my opinion 20 years ago. And we just have been eating by ever since. It's time that this happened. And I think planning for the future down the road is very, very smart. Not just what we need today, but for, you know, none of us has a crystal ball, but we can do the best we can.
We do the best we can, it's just like the jail. Sheriff, you'll say that, the way that they built the jail in the early 90s, the model is completely different from that now. Like, it's totally different. We would build a jail totally different, like this Hodge style, which is much safer today. And so, I'm just kind of trying to make that point, but, you know, we've got a lot of work to do there. But one thing that this Justice Center will do is it's supposed to create,
It's going to minimize not only the security issues and the liability and the intermingling of the inmates in the courtrooms, but it's going to have a breezeway, if you will, from the jail where they can transport the inmates, and they're still technically in a correction facility, so they're not technically even outside of, what would you call that? It's like a secured court, yeah.
Standards for the transportation of inmates back.
Correct.
You know, they will always be in detention.
Which also eliminates the transportation, it eliminates the potential of, you know, one of the issues that we've been talking about, I think, since I got here, was that you've got all these different opportunities for people in the community to leave paraphernalia or hide things around for the inmates to grab when they come in. I mean, it's very nuanced. There's a lot of different things that have gone into this. It's not like we just want to build a building.
It's been talked about a long time, so. And now we have the opportunity to move forward, so.
Mr. Walter?
Quick question. So we know that somebody's looked at the center, judicial center, to see what needs to be done and so forth. Somebody, I assume, has looked at the fairground facility. If we're gonna draw people in, if we're gonna draw events, and what kind of events, they've looked at all of that.
Yes, sir.
Because it's, you know, each discipline requires a little different kind of thing.
Absolutely.
If it
Yes, sir.
We've had consultants with Plan North, and they have also hired out folks that have worked on the Sphere in Las Vegas to some of the best fairgrounds across the nation. So the arena is just a very small part of what all needs to go in down there. It is the one we chose to start with because it's a revenue generator. And yes, it's a part of a master plan that will cover upgrades, remodels. Obviously, new potties are the next thing on our list down there, but yes, it's all been. And Mr. Bohart, sitting behind you as part of the Fair Board, they have been involved in this from the beginning. We have taken all of their advice and consideration, so it has been duly researched.
There, in this county, there are 3 or 4 different people who know tremendous amounts of cutting horse issues, roping things that are needed, rain cow horse things. They've been dealt with, they've been talked to, we need this for this thing, that for that. You can draw something every weekend. You can have a
Absolutely. Absolutely.
It's done right.
Absolutely.
They have stalls, there's a warm-up area that's separate, it's covered as well.
Dustin,
The
I don't know
stalls
if
are
you
all
wanna add
covered.
anything.
No, you might want to add one.
The stalls, there, I've forgotten the exact number of stalls, but it's a bunch, and they're all covered. And there's a warm-up area for the people participating, that's a covered area as well. And so, of course, then the arena itself is covered, so it's a pretty nice facility.
And yes, we did look at it from both an equine perspective as well as livestock cattle shows. Small livestock, not so much, obviously. But Harrison, I think the final had 100 and, how many stalls?
We had 150 stalls drawn in there in the arena. And a couple years ago, we did a market study on utilization of the facility and what those needs were and what it would take to cater specifically to the western disciplines.
Right.
There's not enough demand specifically to the western industry. There's not enough demand for the English folks around here. So it's all really more catered to the western disciplines, especially the nuances between your reins and your bends.
What's the size of the arena?
I have to go back and look at them all off the top of my head, but the performance arena is bigger than what we have now, and then it had a warm-up arena on the side of additional to separate out the
I would recommend that you go, I'll give names to anybody, but there are 3 or 4 people in this county who would really help you get this passed, do whatever you need to do. If there's a vote, if there's not, you're just gonna do it, but maybe help you sell it. If you start taking some heat, if you decide not to have a vote. If it's done right, they'll back you, they'll
Well, you know exactly where my office is, you've been there several times. Would you come by and visit with me about that? I would appreciate it.
Well, I should touch on one more thing, the petition specifically. I have done well over 1,000 deals in my career. Good percentage of those are certificates of obligation. I've had one petition in 34 years, one. And that was for a very controversial and expensive project. It was 15 cents on the tax rate. And it was a non-revenue generating project. What that says is, most certificates are not petitioned. The vast majority are not. Why is that? We try very hard to make sure that clients understand when it's appropriate to do certificates versus when you really ought to take this to a vote. And we do votes all the time. Parks are generally voted. New city halls are generally voted. They're non-revenue producing, they're very expensive, and especially in small communities where you don't have almost a $7 billion tax base and no debt. Under 4 cents, and for projects that seem to be fairly non-optional, or at least revenue generating, is an appropriate use of the certificate of obligation statute. That is my experience. And so we typically would not see a petition on something that reasonably priced. And I say reasonably just because I'm comparing it to what I see across, the state of Texas, where if you're 10 cents or above on the tax impact, I'm going to tell you, you probably should take it to a vote. If you're below a nickel, I'm going to tell you, almost all of those are done with certificates of obligation. So you're well in the sweet spot for a deal that would normally be done as certificates. And I just want to make that point, that you guys don't see what I see across the state, but that is what I see.
Well, and the court has been very open about what our, this process. We've had, when we did the strategic plan, we asked people to come in from each of our precincts. We had discussions with them during this process with you. We've asked you here, like you said, several times. You've been to our commissioner's court. We've put it out on Facebook, what we're doing. We're not trying to hide anything because there's no reason for us to hide this. This judicial center, as you've heard today, is a need. There is a definite need that's, as the commissioner said, that has been discussed for over 10 years. I mean, when I got here, we were literally in debt, and we were like, look, we're gonna have to do something. So there was discussions of it 10 years ago. So we've been very methodical about moving forward with this, and I don't think we've rushed into anything. Would you say we rushed into anything, Mr. Kimball?
Not in my experience.
So,
I usually get a phone call and I'm in the market 9 months later,
yeah.
not 5 years later, or 6 years later, or 7 years later.
So I think it, well, what I'm trying to say is that we've done our due diligence in trying to make sure that we can finance this project.
Yeah.
I think another good point to make, you mentioned the strategic plan. Obviously, we've gone through the strategic plan. The community was engaged quite a bit through that process. I know some of you in this room were a part of those committees. What came out of that was many people in the community also expressed that they wanted some sort of event center, right, around the fairgrounds. Well, what Katie Birch and her team at Plan North, what they have put together in the plan is obviously, like I said, the company that they engaged that did all of the data analysis for the dockets and the courts. They said within 10 years, or 10 years from now, we need to have 4 courtrooms. So for the next, or I guess potentially, if it's built, let's just say it takes 3 years to get it built, right? So you'll have 7 years. 7 years of, there's this additional space on the first floor, an additional open space courtroom that we need to have obviously soon, but on the front end, one of the things that Katie Birch said was that it'll function very well as, what do you call it? A flex space, or to use it as an event space until we get 10, 15 years down the road and we can fund a much different, more event-like center apart from the judicial center.
Which is also part of the Expo master plan. So it's in the long range, it's just way down the road.
And these are all available online, all of this information you're talking about.
Well, it was involved, yeah, so all of the strategic plan, all of those initiatives that will show this.
The drawings that Plan North presented and all of their presentations are also in the agenda packets, which are online, and the video recordings that from each meeting is online. So everything is easily accessible online. Yes, sir.
Mr. Strader?
You keep saying enforcement if you're trying to service something that, correct?
Yes.
But then there's a 1 cent that's already in place. Is that?
No, so our previous rate, so, prior to, we kept ratcheting down our rate year over year until we got close to paying off the debt. And we paid off the debt, but, there were some issues with the auditing firm that we had hired, so our audit was a year off. Otherwise, we would have been here having this conversation last year. So it was
Mr. Kim-
Three-quarter of a cent.
Mr. Kimball,
Oh, it's 3/4, okay, so there's, so you're saying it's 4 cents, but really there's a 3/4 of a cent in place.
In place, but it's represented in the general fund, the general fund rate. So we have that 3/4 of a cent that we can automatically, with no impact to the constituency, transfer over to the INS.
And I think that's a really important point that needs to get into the press.
Yeah.
In addition to the two
In
point
addition
four.
to the $2.5 million fund balance for INS, in addition to the 19 million.
But really it's 3.25 cents.
Correct.
No, it's,
Well,
it's-
the
no, it's
increment-
3.95, and I'm taking into account that
That
.75.
Yeah.
0.75,
So-
yeah,
so
yeah,
Mr.
yeah.
Kimball,
So
hold on just a
net
second.
is
Mr.
Mr.
3.95 cents.
Yeah.
Mr. Kimball, please explain to them what you told us early on, that it was gonna be 5.25 cents.
Yep.
Before we told you that we had 2.4 million in debt service.
Yes.
Before we told you that we had this 0.75.
Yes,
You told us it was gonna cost the taxpayers
5.25.
5.25%
yep,
of a cent. You then, after we told you that, you refigured those numbers.
yes.
One of the 176 times we asked you to refigure them.
Yeah.
And when you refigured them, you said it's gonna, now your
I think
rate
it was only 150.
is
Yeah.
3.95,
Yes, sir.
correct?
Yeah.
And you said you couldn't believe that we had that, we had the foresight to keep
To
those things.
Keep that money for a rainy day, which, you know, I wish it weren't the case that, you know, you're always gonna have to come talk to me at some point.
Yes.
But most people do.
Yeah.
Because it just, facilities wear out, you outgrow them, and you gotta replace them, and, you know, that's, I like the business I'm in because people keep moving to Texas, and as long as people keep moving to Texas, my phone keeps ringing, because you need new roads, you need wider roads, you need
Yeah.
water plants, you need sewer plants, you need new justice facilities.
So, Mr. Kimball, the one thing you don't know is that we didn't come to you when we built the Engineering and Development Services building. We paid cash for that.
Very
And when
rare.
we redid
Yeah.
the file storage facility, we didn't come to you for any money, because we paid for that.
Yeah,
So we're very, the court has been very understanding of our taxpayers and what they're having to pay.
yeah.
So, and we've been very conservative with the money that we have, so that we can do things like that are smaller. That Engineering and Development Services building, if we were to build it today, would probably cost $10 million.
Yeah, no, I get that.
And so-
I'll give you a great example. The first deal I did, when I came down from Chicago, and I'm from Texas, but I had to move to Chicago and get finance training. When I came back, the first deal I did was convincing Dell Computer to leave Austin and go to Round Rock. Round Rock's my client, Austin is not.
Huh?
Round Rock said, you got this phone bank, and you're selling all these computers to the entire world through a phone bank that is located wherever your corporate headquarters are. City of Austin was pocketing all that money and spending it on all kinds of social things in East Austin. And Round Rock said, we'll split that with you over 50 years. And they took their share of what turned out to be, the clock is still ticking on that, because I did that deal in '93. It was a 50-year deal. They've already pocketed over $300 million from that deal from Dell Computer.
Wow.
And what they do with that is they don't issue debt.
Yep.
They pay cash for roads and all kinds of things that they would otherwise have to bond finance. You know, we do deals like that all over, across the state because they make economic sense and they keep the tax rate as low as possible.
Yeah,
You do that with jobs and you do that with tax base.
amen.
You also work with the city of Burnham, is that correct?
Yes, sir.
I did a quick search. They've done quite a few COs in the past.
Oh, yeah. I've worked on them myself.
Is-
I
is
don't
it-
do that account personally anymore. I handed it off to someone younger than me.
I mean, I
But
come
yeah,
up with a
they've been
quick-
doing certificates of obligation at the city of Brenham since the mid-'90s.
So I came up with a quick number of about 79 to 89 million in COs that they've issued in about 7 years.
Sounds right? Yeah,
Okay.
yeah. With no petitions.
No petitions, no, and, I mean, obviously, the numbers
I would've heard
of the
about it, yeah.
petitions that they've, or the numbers on the COs have not been 61 million, which is a big number, right? So it
Sure.
scares people.
Yep.
But, repetitive, it seems like one every year for the past, since 2012.
Mhm.
So, in excess of, I think the smallest one was 1.9 million, all the way to almost 30 million. So, this is a standard practice, I guess. is
Yes,
my-
yeah.
Okay. Does anyone else have a question or comment?
Thank you, Mr. Kimball.
It's my pleasure.
Thank you very much, appreciate it.
Media, I want to
Media,
make
y'all
sure
have
that y'all
questions?
have the information on the 65 plus, the tax ceiling. Please make sure you get that in there, because that is a common misconception.
Y'all have any questions, Jason, Josh?
Anyone else? Okay, we'll move along. Thank you, Mr. Kimball.
Appreciate your time.
Thank you, Mr.
Thank y'all.
Item number 4, discussion and possible action on the approval of pending Washington County Expo rental regulations contract. This morning, we have one of those. It's for the annual pig sift.
I make a motion to approve Washington County Expo rental regulations and give the judge permission to sign.
Second.
Motion been made and seconded. All in favor signify by saying aye.
Aye.
All opposed, motion carries. Item number 5, discuss and possibly act upon the approval to appoint tax assessor collector, chief appraiser to calculate the no new revenue tax rate and the voter approval tax rate pursuant to tax code 26.04C.
I make a motion to appoint tax assessor collector, chief appraiser to calculate the no new revenue tax rate and the voter approval rate pursuant to the tax code 2604C.
Second.
Motion been made and seconded. Any further discussion? All in favor signify by saying aye.
Aye.
All opposed, motion carries. Item number 6, discussion and possible action on the approval of accounts payable. Ms. Kramer?
Today, the total is $564,246.14. That includes a $253,000 check for the ATS building. The rest of it is just regular bills.
Make a motion to approve non-billable.
I'll second that.
Motion been made and seconded. All in favor signify by saying aye.
Aye.
All opposed, motion carries. Item number 7.
Motion to adjourn.
Second.
Motion been made and seconded. All in favor signify by saying aye.
Aye.
All opposed. We are adjourned. Thank all y'all for being here.